Hi, my name is Alex Carlucci. I want to talk to you about the loan process that we have here and everywhere else in the country, the process of getting a mortgage is. So I'm with GustinShow.com, and here's kind of what to expect. First thing is you want to determine who's your realtor and who's your lender. So sometimes you find your realtor first and they refer to your lender. Sometimes you find your lender first, they'll refer your realtor. Sometimes you find them both on your own. So you'll find your own lender, you'll find your own realtor, and you put us together. So depending on how that goes down, hopefully, let's just say the most traditional way is you find a realtor first. The realtor is going to ask you for a pre-approval. And to get that pre-approval, you're going to need to call a lender, and if they refer you, let's say they refer you me, then you're going to give me a call. So when you make that phone call to me, I'm going to ask you some questions. How's your credit? What kind of monthly debt do you have? What kind of student loan debt? What kind of collections? Any judgments against you? Any tax liens? I'm going to ask you a lot of personal questions like that. I'm also going to ask you what you do for a living and how you get paid. So if you're salaried, if you're self-employed, if you get hourly with overtime, if you get bonuses, I'm going to ask you lots of details about your income. And then I'm going to ask you what you have in the bank for down payment and closing cost. So we're going to determine how much money you have, how's your credit, if you qualify with the debt you have, with the income you make. And let's say I do qualify you with the income you make, and I determine that you have enough money for the down payment but not the closing costs. I'm gonna say, I'll write you your pre-approval. You're gonna need all your closing costs credited. You got enough money for the down payment. So I'm gonna say, here, that's a pre-approval for you. I call it a soft pre-approval, and then I ask for all the documents to support that. So I'll ask for pay stubs, bank statements, and I'll run your credit. If we get that far, that's a really good pre-approval. If I've seen your income docs, I've seen your bank statements, I've run your credit, and I've inputted this all into an automated system, and I can see it clearly that you qualify, I'll write the pre-approval letter to your realtor. So then I send that pre-approval to the realtor, and then you and the realtor find houses in that price range, and you start looking. And then when it comes to that price range, it's really hard to get a price because taxes are different. So if I write your pre-approval letter for $200,000 and taxes are $3,000 an average, but you happen to find one where the taxes are $10,000, you may not qualify for $200,000 anymore. So be careful of that. But anyway, I write your pre-approval letter. You and your realtor start looking at places. You guys go looking back and forth, driving here, driving there, and you're like, oh, I like this one. What you're going to do is you're going to submit an offer. And your offer is going to be, let's say, they're asking for $200,000. You may start at like $185,000, and then the seller might counter at $195,000, and you might go to $187,000. They might go to $192,000, and then maybe you'll meet at $190,000 with your closing costs credited to you. So you get a contract accepted with the buyer and the seller. Let's say it's $190,000 and all your closing costs credited. Then you submit that to me, and then I make sure I have all the documents needed from you, like letters, explanations, your driver's license. I start asking for more details. Get your insurance agent going, and then once I have that stuff, I take that application and have you electrically sign it. So you're going to be clicking all these buttons to sign it, and once it's e-signed, it goes to an underwriter, and the underwriter's going to look at all your income docs, they're going to look at your credit, and they're going to go through like a CSI agent. So they're really terrorizing you. They're doing background checks on you. They're doing things I can't see. They may find something on you that I couldn't see in your credit report, like a judgment. So if you think you've gotten your judgment off your credit report, it may pop up in a background check. So be wary of that. So don't, just because it's not your credit doesn't mean it doesn't come up as a little monster. Foreclosures, same thing. They find foreclosures. Well, anyway, after they analyze your income and they agree that the income's right, they make us get verification of employment from your employer to back up the pay stubs and the W-2s you're giving us. So we order that from your employer. We're ordering an appraisal, we're ordering a title, and you're ordering insurance. We can put that all together with any other conditions the underwriter wants to ask from you. If they say, hey, write a letter explaining this late 3 years ago on your credit card, why were you late? Why did you have so many inquiries on your credit report? Write a letter. What are these addresses we found in your background? Write a letter. What all these little conditions, we're going to have to get all these conditions together for the underwriter. Once the appraisal's back, once the insurance is back, title, all the conditions are resolved, everything makes sense. The appraisal value's right, there's no repairs needed, the title has no liens on it, and your insurance covers your loan amount or has a rebuild cost in there so they can rebuild it if it burns down. Once everything's completely analyzed, then we get what's called a clear to close. Once the clear to close is issued from an underwriter, we're like really, really happy. So we're calling around the title companies and the sellers and finding out when everybody can meet for a closing and sit down and sign the closing package. So when you we finally get that date, then you go to that closing table, usually a day before. We know how much you need to bring, sometimes a couple days before. I prefer the cashier's checks because the wire fraud is rampant right now, so if you wire money, be careful. But you bring that check in the closing, and you and the seller sit down and sign. If the sellers may have pre-signed before you guys show up, so you don't have to see them. Sometimes they pre-sign a day before, but sometimes you're all together signing in the room. Once you sign that last little dotted line, you're done. Everybody stands up, you shake your hands, and you own your house. And that's kind of what to expect in buying a house. If you get any questions, please call me. My name's Alex Carlucci. I'm with GustonShow.com, 630-915-7550. Please subscribe.